Having worked with manufacturers for over the past 40 years, I can identify two major issues that drives up the cost of a manufacturer's insurance program. My comments below are relative to a manufacturer's peer group, meaning what will drive up the cost for a widget manufacturer compared to other widget manufacturers. The first, of course, are claims. Have more than the average number of claims in your recent history, meaning over the past 5 years, and you'll pay more than your peer group. It only stands to reason. The insurance pricing equation is based on years and years of actuarial history for every specific type of manufacturer and for each line of business, whether that's workers' compensation, general liability, auto insurance, property insurance, and so forth. Insurance underwriters know that the rates they can deploy on an account are based on historical averages, and they weight those averages for each specific account's actual loss experience. Much of this is done by computer rating systems, but some of it's done by gut, meaning the underwriter's gut instinct after they review your claim history. So, if your claim history is above average, you'll pay more than the average. If your claim experience is well below the average, you'll pay rates well below that average. So, should you give up hope if your claims are high? No, absolutely not. My suggestion is to double down on risk control, which we're going to discuss in a minute, so that you can bring your claims in line or below the average. So that leads us to the second factor that will drive up insurance costs for manufacturing firms, up or down, and it is their attention to risk control. Risk control is the documented process of preventing claims and then minimizing the cost of claims that do occur. Firms that have a culture based on safety and safe operations typically will have a well-documented risk control process. They have risk control meetings, they have goals, they have metrics related to safety and loss prevention. And most importantly, it's embedded within their company culture. When you can demonstrate a robust risk control process to underwriters, you will outperform your peers in pricing. You'll also be outperforming your peers with regard to claims because good risk control programs ultimately lead to lower than average claims. A point I just mentioned that I want to highlight is that when you can demonstrate robust risk controls, if you're in the market for business insurance and you've got a great risk control program, that should be the focal point of your insurance broker highlighting to underwriters. Too often, firms that do a good job or a great job at controlling risk don't get the pricing credit they deserve because their brokers aren't talking about it when they shop the market. And this is a huge missed opportunity and why we put this front and center in our strategic marketing process. Other factors that drive up the cost of insurance for manufacturers? Well, there are other costs, but these are fixed costs and there's not much you can do about them. Things like the products you make. Toy manufacturers will pay more for products liability insurance than, say, a textile manufacturer. Another one is the facilities and the buildings you manufacture your products in. If your manufacturing plant is in an area without fire hydrants or the construction in your building is made of wood, you'll pay more than a firm located within the city limits that have robust sprinkler systems and non-combustible structures. Have a particularly dangerous work environment? Well, you're going to pay higher workers' comp rates than a lower hazard environment. The cost of manufacturing business insurance is very dependent on your specific operations, your claims history, your risk control processes, and other underwriting factors, and the coverages you purchase. Here's the bottom line. If you're a manufacturer and you're frustrated by the cost of business insurance, you need to take a look at several factors. The biggest variable factors I mentioned above are risk control and claims history. You can't do much about fixed factors like your location or manufacturing facility. If you don't have a process around risk control and claims control, then I suggest working with a skilled broker like the Coyle Group who can help you get your company in shape to beat those average costs. If you'd like to continue this conversation and see how we can help you reduce costs and improve your protection, why not contact me? If you're on my website, click the Let's Chat button. And if you're on YouTube, you can see in the description box below my contact info and actually book a call directly on my calendar. Let's chat and see if we might be a good fit for you and your situation. I promise when we connect, no hardcore selling or pressure, just a conversation to see if we might be a good fit for you and your situation. Thanks.